Happy New Year, and let's not waste any time. My favorite time of the month is here. Toronto Real Estate Board has released their year-end stats for December. We're breaking some trends. Some trends we're actually getting in line. So let's get right into it. We're not going to waste any time. My name is Vass. I'm a real estate broker right here in the city of Toronto, where I help people navigate our dynamic real estate market. So in the press release here, I think this summarizes it pretty well. Buyers who are active in the market benefited from more choice throughout 2023. This allowed many of these buyers to negotiate lower selling prices, alleviating some of the impact of higher borrowing costs. Assuming borrowing costs trend lower this year, look for tighter market conditions to prompt renewed price growth in the months ahead. So this last line is going to be a little bit the one I'm going to challenge. I don't know if we're going to see renewed price growth. I think there's an argument both ways, but let's take a look at the data and let's see what happens next over the next few months. Starting with the most popular chart, it is the price movement over the year relative to the trend, the seasonal trend over the last 15 years. So the thin line is the trend that we've seen over the last 15 years, and the dotted black line is 2023. So as you can see, we've ended the year with a price gain on median prices at 2.24%, which is fairly low, call it a flat year. But as you can see, it was pretty much the definition of a roller coaster. We had massive gains in the beginning of the year, and that was because of artificially low inventory. There was absolutely no inventory. And then as inventory started growing, we saw prices coming down and down and down. And now we're well below trend. Now, the one thing to note here is the decrease in pricing relative to trend from November into December. And the reason this is important is in the past, we've seen decreases of about 4 to 4.5%. This is what we typically see going from November into December. What we saw this year is about 2.25% decrease. So the decrease in median price was actually half of what we've seen. A lot of it is probably because we've been beat up over the months prior to that. But this is where we are. So this is somewhat of a positive signal that maybe, just maybe, we're kind of at the bottom of these price decreases, but we'll see, because everything is going to depend on the amount of inventory that comes on the market in January. Here is one very interesting graph that this is an account I follow on Twitter, Pierre, PH Floor. He puts out some very interesting stats. So this is price change, basically what I just showed you on an individual year basis. And what I find very interesting is looking at trend lines from the past. Typically between January and May, we always see price increases. You will see that the only exception to that rule was 2022, where prices actually went down in the spring market. And that's because we had unconventional hikes in interest rates. And then the other year is 2020, which was COVID, because obviously that was an anomaly year, and then price growth started happening towards the tail end of the year. But aside from these 2 years, generally speaking, prices almost always, or for the last 18 to 19 years, almost always will go up between January and May. So is this year going to be different? I don't know, but I think it's kind of important to show you this context, because seasonally prices do go up. From the winter, we've been beaten up, as you saw in the graph before. We've been beaten up until this point. So in theory, prices should go up in the coming months. Now, I don't know if prices will go up or down, but I do question the one metric that I think will drive that, and that is going to be the amount of inventory. So we've had a lot of people that listed, they didn't sell, and then they pulled their listings. And I even have clients of my own that they're planning on listing in the spring market. So it's really going to come down to how many of these listings are going to come on the market, and that is going to determine whether or not we're going to see an increase in prices or a decrease, or if we're going to stay flat. I'm of the opinion if inventory is higher than seasonal, so let's say we break trend and we have a lot more inventory than we usually do, which we're going to get into in a second, then in that case, yes, we may see lower prices. Now, what is interesting is new listings have actually come down, and they're now in line with trend. This is the red line right here. And this is pretty much the first metric that kind of started trending properly starting around June. And this is when also prices started going down. So once we hit trend at the current interest rates, that is what decreased prices immediately. So if we stay on trend, even if we stay on trend in terms of new listings, that actually may continue building up more downward pressure if rates stay where they are right now. The positive news here is sales absorption. So for the last 3 to 4 months right here, we have been absorbing or selling roughly 50 to 60% of what we usually do. So let's say in a regular month in the fall, if we sell 8,000 listings, we're selling 4,600 listings. That is a very big discrepancy. This really put a lot of downward pressure on real estate in general because things were not selling. Although there were buyers, people were trying to front run discounts by way of lowballing or offering a lot less on listings. So this created a lot of downward pressure, which is why prices came down. Now, the positive sign here is that towards the December month right here, what we've noticed is usually this trend, we're supposed to be going much lower in terms of absorption, but we actually stayed relatively flat. So we're now catching up to the trend. So meaning we're actually absorbing roughly 80% of the listings that are active relative to what we usually do on a normal December based on seasonal trends. That's much better than the 50 to 60% we were absorbing in the months prior. And last but not least, and this is probably my favorite graph because this is the one I think people have misunderstood the most. When you provide active listings in any market without the context of what active listings should be at that point in time based on seasonal trends, it's very easy to create fear. And I've seen this a lot online where, active listings are going through the roof, or there's an avalanche of new listings. The market's going to get flooded with inventory, and well, that's not really the case. So we did, in fact, actually go up in inventories from September to November. So you will see that in September, where we usually have 18,000 or 19,000 listings, we're just above that. And then in October, where listings or active listings typically trend down, where we're supposed to be at 17.5, we're at 19.5. So I would say this right here is definitely a point where, if this trend continued, that would basically indicate to me that we're going to have a lot more in the way of listings. That was not the case. It was short-lived because in November, active listings actually started trending down in line with trend, even a little bit faster. And look where we are now. In December, we're right back where we should be. So there are about 10,000 active listings right now. And that is usually what we have in December based on 15 years of seasonal data. So my conclusion, once again, it's going to come down to how much inventory and how many active listings we're going to have in January and February to determine what's going to happen with pricing. One thing I will point out here is, as you will see right here in January of 2023, active inventory was way less than seasonal trend. And we had this divergence in December of the year prior where we had a divergence. We're starting at trend right here. The beginning of 2024 is basically starting at trend. So active listings will be on par with trend. So I do expect that we're going to follow seasonal trends going into January and February. But I do fear that if there's slight increase to that number, chances are we may continue with a lot more downward pressure on pricing. Inventory will drive everything going forward because rates are still high, and that is basically what's eroding purchasing power for anybody that's currently in the market. I hope you enjoyed this video. I'll see you in the next one.